Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at OKLO.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
All right, so let's get into the analysis. OKLO is, it's fundamentally an infrastructure stock, but it's got the DNA of a high-growth tech company, a disruptor.
Right.
We're talking about a company that's focused entirely on the next frontier of nuclear energy, these advanced fission reactors. Their whole vision is just clean, scalable power.
But when you look at the financials, you hit a wall, right? The core paradox. This company is completely pre-revenue. They're selling a vision, not actual kilowatts. Their own projections say the first commercial sales won't even happen until 2027.
And that's precisely why the standard metrics look, challenging. As of Q3 2025, they had a trailing net income of negative, $76.5 million?
Wow.
An EPS of negative 58 cents. So for you as an investor, you're not buying earnings. You're buying their ability to hit these critical milestones over the next couple of years.
Okay, but that cash burn is pretty serious. So why is Wall Street looking past it? Because if you look at the balance sheet, there's a reason.
There is.
They has a huge cash reserve, $683 million in cash on hand with almost no debt.
That liquidity, that is the ultimate strategic asset in the nuclear space. I mean, building power infrastructure is probably one of the most capital-intensive things you can do.
Yeah, for sure.
So that $683 million, it's not just runway, it's the war chest they need for R&D, for materials, and for getting through, years of regulatory hurdles. It gives them financial immunity.
And that seems to be the pillar of the bullish argument. We saw Wedbush, for example, they revised their 2025 EPS forecast down a bit to a wider loss.
Right, to negative 64 cents.
But at the same time, they kept this massively bullish long-term price target of $150. That tells you analysts are not looking at today at all.
No, not at all. They're using, sophisticated discounted cash flow models. They're essentially projecting that OKLO captures a huge slice of this multi-trillion-dollar clean energy market once they hit scale.
They're pricing the future energy giant, not the company that exists today.
Exactly. And that confidence is tied 100% to their technology, to their moat.
So let's break that down. You mentioned the proprietary Aurora reactor. What's the actual advantage there over, say, traditional nuclear plants?
Well, the Aurora is a genuine leap forward. It's different because of its scale and its fuel. Traditional reactors are these gigawatt-scale behemoths.
Huge.
Aurora is designed to be modular, compact, a microreactor, and the key difference is the fuel it uses. It's called high-assay, low-enriched uranium, or HALEU.
And why is HALEU a game changer? What does that do for safety and cost?
It lets the reactor run more efficiently at higher temperatures, but the critical part is the design relies on passive safety features.
So for safety.
Yeah, so in an emergency, the reactor uses things like gravity, natural physical processes to shut down and cool itself. It doesn't need a person or electricity to do it. That simplifies everything. It minimizes risk, and it's why it's potentially so much faster to get regulatory approval.
And that speed, that brings us to external validation. I mean, getting DOE milestones is one thing, but that recent partnership with Siemens Energy, that created a lot of buzz.
Oh, that was huge.
What does Siemens bring that OKLO couldn't do on its own?
The Siemens deal moves them from an R&D project to a commercialization track company. It gives them two vital things. First, access to Siemens' global utility customer base.
So they don't have to go door to door.
Exactly.
Yeah.
And second, Siemens has the supply chains and the know-how to build and service this stuff globally. That shaves years off OKLO's timeline.
So the sentiment is that OKLO has the tech, the cash, and now the strategic partners.
Yeah.
They've got government backing and a huge industrial partner.
Exactly right. And to understand why the stock price moves like it does, we really have to look at the charts. The technical picture tells you everything about the risk-reward here.
I mean, the price action has just been wild. The current price is around $88. The 52-week high was almost $194.
And the low was 17.
An enormous range. It just screams that this stock is driven by news and liquidity, not day-to-day fundamentals.
And that extreme volatility is, it's the cost of admission. It's a highly anticipated low-float growth stock. But if you zoom out on the chart, the technical structure is unambiguously bullish.
Oh, really?
Yeah, you see a clear pattern of higher lows. That shows that institutions are buying every dip. And that 200-day moving average, around $67, is acting like a concrete floor of support.
Okay, so let's look at the shorter term. The stock's been in this channel, right? Between about 85 and 110 for the last few months. What are the momentum indicators telling us inside that range?
The indicators suggest it's like a coil getting ready to spring. The RSI, the Relative Strength Index, is sitting around 42.
So neutral.
Totally neutral. It's not overbought, not oversold. There's plenty of room to run on good news. And the MACD, it's negative, but it's showing the very first signs of a bullish crossover. Momentum could be about to shift.
But with volatility hovering near 19%, you need a push, right?
Yeah.
That 200-day average is support, but what actually pushes the price through that $110 resistance?
That brings us right to the near-term catalysts. The next few months are critical. The main fixed event is the Q4 2025 earnings release. That's expected in January.
And no one's going to care about the earnings per share number.
No, they'll ignore it completely. They'll be laser-focused on updates about regulatory progress and any more details on the Siemens partnership expansion.
And beyond the earnings calendar, you've got the institutional flow to think about, the big funds.
Absolutely. You need to watch two major flow events. First, the 13F reports for Q4, expected in February. That's where we'll see which big funds bought in.
And the second?
Second is potential ETF rebalancing in December. If OKLO gets added to a major clean energy or infrastructure ETF, that provides a huge, non-speculative wave of buying.
Okay, but let's talk about the buzz, the rumors. What are the whispers that are driving the speculative interest right now?
There are three big ones. The most immediate one involves a new strategic partnership. There's a lot of chatter about advanced talks with a major global utility provider.
A pilot project.
For a commercial pilot project outside the U.S., that would prove international scalability, which would be massive.
And what about the government money side?
That's the second rumor. Speculation is very high that OKLO will be shortlisted for a significant DOE advanced reactor grant. That would be non-dilutive funding. It de-risks development.
And the last one? The regulatory shortcut.
Yeah, this is the big one. The persistent rumor is that they might get an accelerated review pathway from the regulators.
And what would that mean in practice?
Well, traditional nuclear approvals can take 5 to 8 years. An accelerated review could potentially cut that timeline in half.
Wow.
That one announcement would instantly shift their whole commercial timeline forward by years. It would be the most powerful catalyst they could get.
Now let's inject some skepticism here. What about the insider activity? We've seen some pretty big sales, like William Goodwin's multi-million-dollar sales. If the stock has this much potential, why are insiders selling? Shouldn't they be buying?
That's a critical question for you to consider. The official line is that these are, routine liquidity events, monetizing stock awards, but you have to contrast that with the overall institutional trend, which is steadily increasing. So while some individuals are selling, large long-term funds are building their positions. They're looking past the individual sales to the bigger structural story.
And that dichotomy, insiders selling, institutions buying it, brings us right to the risks, especially with the valuation you mentioned.
The valuation sensitivity is paramount. When you look at the price-to-book ratio, it's at 22.6. That is drastically higher than the sector average.
So it's fragile.
Extremely fragile. Any missed deadline, any partnership that's smaller than expected, it could cause a very rapid and severe correction.
And what about the company-specific hurdles beyond just valuation?
It really boils down to two things: execution risk and regulatory hurdles. First, execution. They're pioneering new tech. They have to manage first-of-a-kind supply chains flawlessly.
And regulatory.
Regulatory risk is unique for nuclear. Any new safety rule, any delay in getting a permit could shatter investor confidence in their timelines.
We also can't ignore competition. They might be a first mover, but this space is getting more crowded.
It is. Competitors like NuScale and TerraPower are moving fast, and they're backed by huge capital, so that puts pressure on OKLO. And finally, there's the macro factor. It's a high beta stock, so if the market as a whole corrects, OKLO will likely fall further and faster.
So, synthesizing all this, you've got a company with a massive $683 million cash reserve, proprietary tech, huge tailwinds, but it's also carrying this heavy burden of being pre-revenue with a very volatile valuation.
Right. The global push for decarbonization and energy independence gives them incredible long-term growth drivers. The question for you is really about your timeline and your tolerance for risk.
Which brings us to the optimal investment horizons.
Based on everything, this stock is really suitable for two distinct types of investors. First, aggressive traders looking to play those new-term catalysts, a partnership announcement, a regulatory update. But the second, and I think where the real opportunity is, it's for the long-term structurally focused investor. Someone willing to look past the next 2 years of losses to get exposure to what could be the foundational architecture for the next generation of clean energy.